Welcome to this session of Free Tax Tips. What we're going to talk about tonight is I lost my house. So how's that going to affect my taxes? This comes up a lot, especially in this day and age where there's been a lot of people who've had to walk away from their properties, gotten foreclosed on, short sale their home. How are these things going to affect my taxes? Good question. First things first, you have to realize that because you no longer have payments or no longer have been making payments on that property, you don't have that mortgage interest deduction. You don't have that property tax deduction. So there's not that much income that we can offset with a write-off. So you'll notice that the tax liability is going to jump up again. Let's say you had been getting a big tax refund, $5,000, $10,000 refund. That's not going to be the case because we have a lot of income that we have to offset. Or we have income that we have to offset that we no longer can do because we don't have the write-off. So that's what you're going to see that changes first and foremost. Not having that write-off or deduction in place is going to change the numbers around as far as your tax liability goes. What happens next? Well, if you have a short sale, for instance, there's a likelihood that the lender, especially on the first here in California, well, they will just kind of deal with whatever they can get from the property with no tax consequence to you. And then if you have a second, the second may do the same. The second may, be satisfied with a small partial payment on whatever is owed to them. Now let's say, for instance, that second does not, or the first, at least right now, that first or second isn't satisfied from the sale of that property. Then what happens is there's a balance due. Like right now, a lot of properties are upside down. What do you mean by upside down? You may have purchased a property for $500,000 and it's worth $300,000. So you owe a lot more than what it's worth, being upside down, that is. And if you were to short sell this property or walk away from it, then there's a $200,000 gap there that needs to be satisfied. Typically what's happening now, it's 2012, just start of 2013. In 2012, what happened is there was debt that was forgiven. So that $200,000, if you walked away from the property, the first wouldn't come after you for it. Well, that's been extended through 2013, December 31st, and that's good news for a lot of people who have just recently had to make the decision to maybe walk away from the property because they're upside down and can't afford it or whatever the reason may be. So keep that in mind. Those are different things that come up that are very common. People are upside down, foreclosures, short sales. So those are things that will happen. Number one thing, as I was mentioning, as far as what you will notice on the taxes, is going to be an increase in the liability because you don't have the write-off. But from the bank standpoint, if you dealing with a separate issue now, if the bank forecloses or short sales, then you have that $200,000 balance due so much to them that's going to be forgiven, which is good news from now through the end of 2013. So you don't have to worry about that either in claiming that $200,000 on your taxes. So that's actually good news that got extended. And a lot of these seconds, aren't putting out deficiency judgments. They're, settling for whatever they can get from the sale or negotiated with on the first loan. So that's good news. So I hope this has been helpful. If you found it helpful, definitely feel free to like us, and you can subscribe to our channel as well. And we'll keep you posted with new tips. Catch you next time.